Hey, everybody, happy Sunday and welcome to episode 9 of the Trading Pit. Today's episode is going to go over 4 different segments as always. Segment 1 is going to be talking with traders with Noah, founder of Tradelabs. Segment 2 is going to be the broad market recap as always. SPY, QQQ, IWM, and VIX are going to be the charts we're looking at. Segment 3 is going to be the watch list with Arun Chopra. He's going to go over some of the different stocks he's looking at into the end of the year. And then segment 4 is going to be the weekend chart request as always. So sit back, relax, and enjoy the show. All right, everyone, into segment 1, talking with traders. We have Noah Loffredo, co-founder of the Tradelabs. And today we're going to talk a little bit about how Noah first got started, how his technique has changed over time since he's been more experienced, and then learn a little more about Tradelabs. So Noah, thank you so much for joining today.
Yeah, thanks, Jake. I'm excited to be on the show.
Hey, you're very welcome. Thanks for coming on and talking about your experiences. Everyone's got some interesting experiences when they start trading. So I figured with you being a younger guy, you may have some people that may be able to empathize with you a little bit as they're newer traders. And how did you get started trading? What got you into the market? What age did you start trading? All that good stuff.
Yeah, so I got started my senior year of high school, which was actually 2017, which happened to coincide with the crypto run, obviously. So
Yes.
That's really what piqued my interest initially with trading and investing in general, because obviously that was spreading like crazy all over the internet.
Mm-hmm.
But then besides that, I had a few friends that have parents that are kind of in investment management, wealth management, that kind of thing. So they kind of always had an interest and were kind of talking about it. And then my senior year of high school, one of my friends started trading options and made a killing that year, senior year, and really kind of piqued my interest. Obviously, he was telling me about it every single day, what he was trading and all that kind of stuff. So it piqued my interest and got me kind of into it. And I started kind of researching. I downloaded Robinhood that senior year. And then really going into the summer of 2017 is when I kind of started getting a little bit more serious with it. I started trading UGAS and DGAS, natural gas,
Nice.
just kind of swing trading that here and there. That's really kind of the first thing I did. And then going into college in the end of 2017, in the fall of 2017, I joined the university investment club, and I
Nice.
kind of was placed into a tech sector analyst type role. I was super interested in finance, wanted to go into investment banking. So I was loving it, super interested. Every week we had to make reports and all that kind of stuff, and it just loved every minute of it. But then more and more, I had friends that also started trading, and specifically more doing options, obviously, because that's where the big gainers are at. And eventually piqued my interest enough that I really got into options trading. I think it was the January of 2018, right before the crash happened, 2 weeks before the crash happened. I think I started trading options. Tripled my account in a week or two, and then the next 2 weeks I lost it all and then restarted in February.
Oh, well, I wish I could tell you I haven't done that before, but I think everybody has that experience in the market. And honestly, it's kind of tuition. I mean, you don't pay to go to school to trade. I mean, you can learn economics, you can learn finance, but I know a lot of people who studied finance who couldn't tell you what a candlestick is. So, the tuition of trading a lot of the time is losses, whether that's how severe those losses are, or kind of up to your trading style. But I think a lot of people blown up their accounts as well, and it's just part of the process. So, when you first started versus now, what are some things that you have learned and have changed with your trading style in order to mitigate risk, maybe allocate your capital over different positions? Kind of how has that changed over time?
Yeah. I guess like I mentioned, when I very, very first started, I was swing trading UGAS and DGAS. So it was very much looking at oil and gas reports each week, and then just buy low, sell high. And I didn't really have much thought into each trade or really taking it that seriously. I just kind of oh, this one's low, I'm going to buy it and then sell it when it's up higher. Didn't really think much of it, and it caused a lot of losses. I didn't even think I really knew how important a lot of things were, like volume, supply and demand. I didn't really understand any of that stuff. I just saw a chart and I saw that it was low and I bought in. And I think obviously more recently with TrendSpider, you guys have helped a lot with your platform, all the indicators and tools. That's changed my trading significantly, especially with volume shelves, anchored VWAP, all that kind of stuff really has changed it. But even before then, I think I just started taking technical analysis more seriously rather than just like, buy low, sell high. I started learning about, candlestick formations, patterns, like I said, volume and supply and demand, even order flow. I started really getting into all that kind of stuff. And I think in anything, my trading just became more well-rounded. But then you also mentioned capital allocation. I definitely used to go just like all in my whole account on a swing trade. Granted, it was only like $1,000, $2,000, but it still probably was not the smartest idea. And I've definitely, gotten a lot better at kind of mitigating my risk, going in a lot smaller. I don't really ever go in with more than like half my account, try to keep it, always have cash and reserves, all that kind of stuff. I think my strategy in a nutshell really has changed to, survive another day, live another day. As long as you can trade tomorrow, you're in the clear. And before I would just go all in, no risk at all. So it was, yeah.
Yeah, no, it's that's the funny thing. A lot of people have different accounts, right? Like I know I personally have a couple different accounts that I trade. Some of it my money, some of it family money, and different accounts. And each account has a different personality. Some accounts I'm a lot more aggressive than others, and sometimes the best way to do this is literally have 2 or 3 different accounts. So you're almost hedging your bets by playing an account differently than the other account.
Yeah,
So that's something I used to do a lot. I don't do it too much anymore just because I'm mostly position trading because I'm so busy with TrendSpider. But I didn't know if you've ever done that, but that's one thing I've done a lot is having like 2 or 3 different accounts. Each one I trade slightly differently, kind of to hedge my bets type deal.
I definitely have done that, especially more recently. I have a different account. I started selling options for quite a while there too, using like a Option Alpha, Tastyworks selling option strategy. That played off for a while. I even got into like, once I started actually making an income, I started putting it into like long-term investments and kind of playing my own portfolio that way too. So I've definitely diversified instead of just putting it all in one account, all one strategy.
That is a good idea because
Yeah.
it's not you may and the thing is too, you may be right on the money if you go all in, but for every percent increase in your account that you're in, you start to have an emotional kind of response. Okay, I'm in 25% of my account. Oh, I'm in 75% of my account. Then you're like, oh crap, if this thing's not right, I'm going to absolutely destroy this account. So, it's not necessarily like, going all in an account is never a good idea, but it also messes with the psychology of your trade because then you're like, oh man, this is, I've got all my eggs in one basket. If this doesn't work, I'm going to get hit pretty hard. So I definitely understand that. So for now, are you mostly an options trader rather than I'm assuming just buying common stock for long term and then options trading most of the time?
Yeah, options trading most of the time. I'm definitely not much of a day trader with options. I like to kind of hold on to things for at least a couple days, if not weeks. I like call spreads, longer term, stuff like that. I'm pretty risk averse just in general when it comes to trading and investing, probably because I've had experience blowing accounts and stuff like that. So I tend to be pretty like medium to long term, not too risky, that kind of stuff, but mostly options.
Yeah, I've been trading for a long time, and I always have realized day trading is great if you can literally find a way to almost automate the strategy and optimize it. But generally, swing trading or position trading, you're going to get a bigger return. Now, if you're in an options contract and you're out of the money and theta's kicking in, that's an issue. But generally, especially for common stock, if you just stick with your plan, hold on to it until you hit your target. And it's funny, I had a conversation with my dad because I manage his money as well, or at least one of his accounts. And I go, so what's your plan on getting out? He goes, well, I was just going to hold for a year. I'm like, that's not a plan. I was like, what's your profit target? Like, when are we just going to call this quits? Like, what are you happy with for the year? Not, I'll look at it in a year. What does that even mean? So, definitely having a plan is just as important, whether that's being a day trader, whether that's being a swing trader. So that's great feedback. As far as, I'm sure there's a lot of newer traders watching this. As far as newer traders go, what would be something that you would tell them that you would have told yourself when you first started trading?
I think one thing, really the big thing that I learned pretty like the rough way is I didn't start with what I know. And I think that's a big piece, especially nowadays with either fractional shares or even options trading being as accessible as it is. I think there's no real excuse for people that are just getting started to like, try to dive into some super advanced strategy or penny stocks that they don't know anything about. Like if there's just one brand that you like a much, watch that stock every day, watch how it moves, learn it, and like really study that one stock or a handful of stocks, and make sure it's companies that you really like know and care about. You're also probably going to be more in tune to any news or anything that comes out around that company that way too.
Yep.
And I think that's something, especially with me starting with like you guys and D guys, I was in over my head. I had no idea what I was looking at or doing.
I'm curious, were you even looking at the spot price at that point of natural gas, or were you literally just trading U gas and natural and degas?
When I very first started, no, not even looking at the spot price, not looking at futures, not looking at anything. Like literally pulled up the you guys chart, saw that it was lower than it was before, and I bought in. It was
I love it.
that's
I
about
uh,
as simple as it started.
I'm laughing because I've made 10 times worse mistakes. So I can feel your pain there, and that's the part of learning. Like I said, there's no tuition, there's no like stock market university. Your tuition, unless you want to pay somebody a lot of money, and sometimes that doesn't even work out. Your tuition is really your experiences,
Right.
and really that's all it is. Whether that's a monetary experience, whether that's just an experience that you know you dealt with a huge drawdown and then you finally did make money. I know a lot of people in the industry who are very well respected who still make mistakes like that, where, their lesson wasn't necessarily a loss, their lesson was a drawdown. And so, that's just as important as a loss. And being able to hold through a drawdown and stick to your plan is probably one of the coolest things. I'd rather make 10% on a stock that I had an X amount drawdown on and just said, don't sell it. You're sticking to the plan rather than, getting lucky and making 50%. So, sticking to the plan is huge. So, I'm glad you brought that up. But before we end this, I want to learn. Well, I know about Tradelabs, but everyone else doesn't. So, can you tell everybody a little bit about Tradelabs, what exactly it is? By the way, congratulations on having Pup of Wall Street as a customer. He's one of our, top chartists as far as how many charts he posts a day. He's on the
Absolutely.
same level as us. So, can you tell us a little bit about exactly what Tradelabs is?
Yeah. So Tradelabs is a platform for managing paid trading services. Um, Really, where it all started was when we were in college, me and my co-founder Nick, we started trading with some of our friends, and they were getting interested in what we were doing. So we actually started our own paid trading service where we were charging like $20 a month for access to a Discord group, and we were just kind of teaching not only our friends but also like peers in college and people that we met through finance courses and stuff that we were in. So
Yep.
started teaching people in that course or in that group, and there's just a lot of kind of inefficiencies with running those trading services, whether it be
Huge.
subscriber management or payment collection, all that stuff. So we kind of, with Nick's experience, he's got more of a software development background. We kind of started building custom software just for ourselves to kind of automate a lot of what was going on in the trading service. Like when a new subscriber joins, automatically adding them to the Discord and then removing them when they cancel. Even something as simple as that there wasn't a good solution out there for it. So we built it ourselves. And then we realized that there was hundreds of other trading services out there that had the exact same problems, same inefficiencies. And we kind of started talking with some of those people, and they expressed a lot of interest. Magic Mike, shout out to him for being our first customer back in April, but he believed in it from the beginning and really understood, some of the problems with running that service, and jumped right on and started automating his service with it, and it kind of took off from there.
I love it. And that's the thing, if anyone does have a trading service that's watching, definitely consider this, because when I had a trading service before TrendSpider, I found myself dealing with customers more than I was trading. And it's like, I opened this to teach people, not to deal with different inefficiencies, whether that's billing or, making sure somebody's paid that's in the Discord. So I love
And
what you guys are doing. I think you've nailed it on the head, and there's definitely a inefficiency in the market. Pardon the pun, not the market, but this
yeah,
this particular industry. that really needs to be optimized. And so you guys are there to optimize that. And I think it's just a great idea. So I hope you guys continue to grow. And it's awesome to see a lot of the users of TrendSpider starting to migrate over to you guys to take some of that kind of that legwork off. It's a lot easier to have a room when you're just focused on trading and answering customer inquiries, not dealing with billing and all that stuff. So
I think you hit it on the head perfectly with that, because like the traders that run these services, what they're best at is trading, and they shouldn't have any other work that they need to worry about other than trading as good as they do, and then answering questions when subscribers have it. And I think we're just trying to help them do that.
I love it. Well, it's definitely a problem in the industry. I can speak firsthand about it. I remember it was a nightmare getting mine set up, and thankfully, I was able to join TrendSpider, so I didn't have to deal with that anymore. But now, if I had my own subscription, I just have you guys do it for me. So, really appreciate you coming on and telling us about Tradelabs and your overall experience. Just a reminder, everyone, Noah is in college, so he is a younger trader. So if you guys are young as well and want to get some ideas or just overall experience discussions with him, definitely reach out. I'm sure he'd be happy to talk with you. At the Tradelabs is your Twitter handle. And what's your personal Twitter handle?
At Loffredo Noah. Loffredo Noah.
Okay, and that's not Alfredo Noah, guys. That's Loffredo Noah. So, all right. Well, thank you so much for joining, and really appreciate your insights today, and can't wait to see what you guys do in the future.
Yeah, thanks for having me, and thanks for the continual support. Really appreciate it.
Absolutely. We'll continue to do so, and have a great day.
Awesome. Thanks.
All right, everyone. Looking at the broad markets into the week ahead, I have to say things are getting a little overextended on pretty much all of the charts except IWM. So let's dive into it and see what we have. On SPY, we have this huge ascending wedge here on the daily chart. You can see that the price action has really been respecting this resistance zone. And notice that I've been using these double trend lines a lot more lately. So we've done a couple videos on this, how we draw them. So if you are interested in learning how to draw these double trend line support and resistance areas, definitely check out that video on our Twitter. Now, the reason why I say things are getting overextended is really on the weekly chart. And what I have here is I have the weekly chart with the Bollinger Bands overlaid from the monthly chart. So we have the weekly chart with the monthly Bollinger Bands. As you can see here by the red circles, anytime that the weekly price has really gotten outside of this upper Bollinger Band from the monthly chart, things have definitely pulled back, sometimes very violently, especially back in February. We were trading outside the monthly Bollinger Band for multiple weeks at a time, and then finally we just absolutely waterfalled. So we are getting close to that area again. We're definitely pushing up through this band. Now the question is, will this band just continue to move up and the price just rides right along it? Now that's the question that we can't really answer yet, but it is always important to notice when we are getting kind of on those extremes on the monthly candle and the monthly chart. Going into the Qs, pretty similar story here. So you'll see here that we do have pretty similar of a situation. Rather than an ascending wedge, we have more of kind of an ascending triangle here. Long resistance, long support here. Very short kind of term resistance here, kind of double topping over the last few days. But the thing is, really, the main thesis on these charts is these weekly candles getting so close to the upper Bollinger Band on the monthly. And you can see here I'm highlighting all of these. I mean, this is really an area where things definitely get sketchy. And you can see here we did move outside of the Bollinger Band for quite a time. And remember, this is the monthly Bollinger Band on the weekly chart using multi-time frame analysis. And then you can see here, once again, we are getting to that area pretty quickly, very similar to how we were in February. So are things going to pull back from here? Nobody can really answer that. But what we can do is we can look back in the past and see how things have materialized when we have been in this area before. And you can see that we have had some pretty significant drops after that. So definitely overextended. We'll have to see how overextended that actually is into the coming weeks. IWM is one that's not really that overextended yet. The thing about the IWM chart here, we do have a little bit of a pennant. So you can see that we've got this kind of this flagpole here shown by the black line, and then you've got your pennant with the support and resistance here kind of trading within a very tight range. And then if we do overlay the monthly Bollinger Band on the weekly chart, you will see that we recently did just break through that basis moving average from the monthly Bollinger Bands. And then we did break out of that ascending triangle. And then we didn't really have a ton of luck closing near this week's high. So we'll just have to see what happens going into the week ahead. But all in all, things are looking a little interesting on the bear side. Look at VIX. VIX is still trading within this falling wedge. I mean, it's kind of crazy how this has just continued to grind right into the apex of this falling wedge. I mean, technically, we could just continue to go down, for quite a while. I mean, if we really technically wanted to talk about that. But I mean, the question is, will we continue to just trade within this very tight range? We'll just have to see. But once again, you can see on the weekly chart, we did attempt to fill that gap again below. We got even lower this time. The bottom of the gap is around 1820 or so, and we did close around 22. So there is still quite a ways and room below to move down on the VIX if this really did want to continue to move down. So all in all, broad markets are definitely getting a little overextended. VIX is getting very tight, and we'll just have to see what happens into next week. And let's move on to the next segment.
Hey everybody, Dan here with TrendSpider, and this is the Watchlist, where we bring an experienced trader on the show and talk about what they're looking at in the coming weeks and months ahead. Today I've got a really great guest with me, Arun Chopra. Arun's with Fusion Point Capital, and Arun, thank you for being here with us today.
Yeah, definitely, man. Thanks for having me. I'm happy to be back.
That's awesome. Yeah, I mean, for those of you who haven't seen it, Arun's a repeat guest. And you should definitely go back and watch his old segment. It's really good stuff. So Arun, we were just talking. You are one of the more experienced traders that we have on the show. How long have you been trading? How'd you get into it?
Yeah, no, I definitely. It's been a while now. I'd say probably over a decade. But I started kind of in a different way than most people. I was sort of thrown into the market. I think some people know part of my story, but I was around in the 90s. I was a kid. The 90s bubble collapsed, and I bounced around. I did a fair amount of advising and things like that, but I was always in the markets, but I hadn't really been aggressively doing the things I'm doing now till probably middle of the early 2000s, give or take. And so I've seen a lot of things, whether it's the gold bull or the past one or the financial crisis or everything we've seen since then. And then I've taken some breaks as well, and I think I've mentioned a little bit about it, but I do some film stuff. I've made a couple of films here and there. So anyways, it's a fair amount of time. And it's, in some ways, it almost feels new every day now with Twitter and everything else. But a good amount. I've seen about almost 2-3 cycles now.
That's wild. Yeah, I remember. I remember 2008, right? But I also remember March of this year, and it's just like,
right.
Wow, that old adage about the market stair steps up but takes the elevator down is so true.
Totally. And I tell you, I mean, even in March, it's funny how sometimes not too much experience, but the idea that you've seen a fair amount of things, and even now, I think everyone expected at some point maybe the VIX 40 or 50, and then you get an 80, which hadn't happened since 2008, and I remember that, and then you don't see one again for a very long time. And so it's amazing how experience can help you. It can also be a hindrance at times, but I think it's all about just sort of building perspective. And certainly for younger traders, I think you can't have, it sounds stupid because you hear it all the time. I used to hear it too, but you really can't have anything better than these experiences when you're young, because, I think back to the debt downgrade, and it was so instructional, and I had already had experience by then.
Absolutely. So Arun, one of the things that we were chatting about right before we started recording here, and this is one of the things that really impressed me the most when I first met you and came across you, was how you called basically the very top in the entire cannabis space. right? And you were short almost all the way down. Maybe can, just so people can see that this is somebody that you should actually pay attention to. Maybe you can talk a little bit about that and show off that trade a bit.
Yeah, yeah, absolutely. Yeah, no, definitely. That was like for me, I had missed a lot of the run up, and I can't fully recall right now what I was in, but I know that they became a fancy trade, not quick. It took some time, and if you go back and look at even like the CGCs of the world, I would probably go back to even before the rallies started. A couple years now, and if you look all the way back, this started almost back at $5, I believe, before it really got up to here. So somewhere around this zone, I could sort of sense, and there was a lot of valuation things. And I do run an algorithm that kind of picks up on sentiment and extremes and things like that. And it was all happening in here. So I believe I could sense that this sort of handle and cup and all this stuff was just not textbook. There was a lot of problems with it anyways. And I did build this thread over it for those who haven't seen it, but it was kind of like, I do this a lot more now. I obviously have, members and private clients outside of this stuff. So I don't give everything away, but I just kind of threw this out there on the 24th. I guess this is a year ago now, more than that. And then part of this was just tracking it and showing people kind of how, you could look back at CGC in the 40s, Tilray's in 65. And part of what's, you could see, even as I posted these and have traded these, I've gotten a lot better at trending over time. So Tilray's trying to break 65, and, you wonder, is it going to be a false pattern or whatever? And as it breaks, what's amazing about some of this stuff is as it breaks, this looks extended at the time, and it gets way, way worse, right? And so even you have earnings reports along the way where, CNBC will talk about soars on earnings. It's down tremendous, and it goes further and further. So, yeah, I mean, this is not something that, you pick up overnight. As if you're young, you're not supposed to see that coming. Even at my stage, I certainly didn't think it would, fall as far as it probably did. And I've gotten a lot.
Under 10, right?
What's that?
Tilray's trading under 10.
Oh, yeah. Tilray, I mean, yeah. And some of this you could see in terms of valuation, I guess you could say, like, once they started falling, there's no reason for them necessarily to stop. But if you think about it, there's a couple lessons. It's not so much even, I mean, I try to do this so people can see, and you're never always going to be right, but it's really cool to hear, like, this is what, showed people what I'm doing. And then part of it is just knowing that, these things take time. You're not supposed to know this overnight. And I've gotten a lot better even through Twitter feeds of just hanging on to trades and really taking them in the directions that, they're kind of breaking and going. Yep. And reality is newer traders and people who are more into these sort of spaces, like if you're young and marijuana is legal and all these things, and it's starting to grow as an investment idea, and we know the benefits of it and all that, then you're going to be buying these dips on the way down. It's just something that it's what do they call it, tuition or whatever. It happens. And so, it's not, trading A is not for everybody, and anyone can sort of make a trade. The question is, over time, can you build that mentality to like grow with it? And part of that is even knowing that your most beloved spaces can take a drubbing,
It's separating the emotion from the chart, right? And just let the chart speak to you. Who cares what you do, right? So that was a great trade. I'm still happy for you even today, because a lot of people have that kind of conviction on the way down. What are you looking at going forward?
Yeah, so now I feel like the market has kind of turned so much over. I think the last time we were here was March. Literally March or April was the last time, and and it's amazing that back then, whether it was, I could probably look at RSP even just on an equal weighted basis, but my guess is that it was outside of the Bollingers, right? And this is the monthly with your multi-time frame stuff. And so, back then was just a different kind of world. And as much as this has gotten back into the mid zone, it's really about stuff that, to me right now, that kind of has gone overboard. And I think every situation is kind of different, but now part of what's in my mindset is, you look at IGV outside the Bollingers. You can look at big names like Shop, of course, that are outside. I would add Taiwan Semi to that. That's moved outside, right, by a significant amount, in fact. And you could add AMD and those things. So I think, for me, last time I was here, we looked at stuff like VAR, which had fired on, so some of the sentiment and algo signals had fired outside of this. And I remember being like, well, I like it because it's outside, but I don't know. I've got a signal. could see a little double bottom, and it ended up getting bought out, up here, I think at 173. So my sense of it is just, that now a lot of that is turned upside down. And the other problem is a lot of the industrials and things where you would say, okay, well, maybe they haven't run as far. I think you're starting to get to a place where even those are very extended, right? Or at least in their upper, Bollingers, not that being the end all be all. So I think the first thing for me, even as I was thinking about today's show, was just more, what do I see? And I think that the bigger problem is not only has some of the best stuff run, but I think we're starting to see it run in a way, I haven't looked at NVIDIA recently, but we're starting to run into a way that in many ways is the opposite of what we were doing when we came in, in March.
Yeah. Yeah, I'm seeing a lot of what looks like great short setups and not a lot of long setups, right? And I mean, see that in the indices as well, right? The market is just, I mean, it's at all-time highs, right around there, right? Makes me nervous.
Yeah. I think the only difference I've seen so far, and it's too early, I would think, to say, but for those people who kind of see some of my stuff, or even, people who know the algos and things that I'm running, one of the bigger differences I think right now, at least to date, is when you look at stuff like, let's say, a Tesla, which also jumped outside the Bollinger, and I did have, signals on all of these, not even as much as short signals, as much as this is kind of a full trade and it's crowded. That component has really resulted in a lot of sideways action. So even if you look at like an Amazon as well, and so, Amazon, which jumped way, and one of the things, you can add, obviously, like even the daily Bollinger, right? And you get these convergence points where you're outside the monthly and the daily's gone berserk too. And that is, and when I get a signal as well in the other systems, that kind of tells you, okay, you got a little one here too, but I think some of the differences, we're getting into these sideways consolidations. And so I think the question will be, how big is the short opportunity when the Fed is doing what they're doing? And I worry that maybe this is the effective short at this point, sideways. So that's kind of what I'm debating now, because I don't think these are overnight things. When you go back to Taiwan Semi or something, if they're really going to correct, it's going to be a lot more than just what's happened so far.
Yeah, I mean, everything does look overextended, right? When you look at it, but then it just keeps on going. Do you hedge? I mean, do you stay with the trend and go long right now, but stay hedged, or are you looking?
Well, so the way I've said it to people who've kind of, I've noticed, obviously, I'm sure you've seen it too, right? Just that vibe of, well, what do I buy, or whether it's the Robinhood stuff or whatever everyone's talking about. So I feel that in terms of newer money, it's kind of like a no-go. You have to sort of accept that, okay, the easy money's been made, and not even the easy money now, what normally is difficult is working. And it's giving a false sense probably of confidence for newer money. For me, my largest position in the March low is TECL. And that one I kind of did as it came in. I scaled into this. And I've made some jokes on Twitter about the trend and how many people tried to short every downtick in the trend. I mean, literally, if you looked at the algo data, every single one of these was met with the type of sentiment and selling that you would see during these declines, if not the low. And it's almost shocking even to go back and look at. But what I didn't love was kind of bumping into the upper Bollingers one, but really just this last move off the earnings. So I don't know. I mean, I think for newer people, I think it can work. What I've done is lightened up going in and then just trailed. And by allowing, by selling into strength, I can lower that trail than I normally would. And so that's allowing me to say, okay, I still believe that this is a live breakout. If we go to XLK, it's probably easier because XLK is at new highs, right? So, you start to say, okay, well, that technically is a breakout, but look where you are, right? So if I didn't sell into strength, I would be far tighter. And I do know people, the problem with most of the hedging systems that tend to work over cycles is you're doing it after a bit of weakness in some form of a crossover. And when you have such a strong V, I just, for me, what I would rather do is sell into that strength and then take that trail and back it up a bit and just let it do what it's going to do. And that's honestly, that's the benefit of buying into the low, that I don't have to think about that too much. Every position you take has some risk. Do you want to take new risk here? And that's why I always laugh as people who, say it's too risky, it's too risky. Well, when is it not? And would you rather have the risk of buying the top or the risk of, of just a turn even, which would save you in the near term when it was happening, last time we were here.
It's fascinating. Is this a sector that you're actually trading right now, or?
Now I just have my remainder. Now it's like nothing new. I if anything, I tell you what I've been doing is obviously looking intraday and seeing, when you look at Zoom and these, it's like, well, are these actually going to break here? Right. You could make the argument here too. And I did this on Twitter a couple of times. My algo did fire into these. We got declines, but these stocks have very limited, floats and they're not their momentum, so I would argue that this actually was a win for that system, even though it moves higher. And now, the big questions is, are these rounding out? You can look at the volumes and kind of try to see, but no matter what, one thing historically, right, and I think we saw that with March, is once you're in this condition, if it starts to go in that way, it's going to go in a way that most people say, who could have seen it kind of coming? And that might, stem from here. So just from an experience standpoint, doesn't even mean I'm necessarily doing anything, but I have been watching these really close intraday to get a sense of, are they fading out? And to me, the jury's not out yet on, is this sort of rotation real? And is this rotation going to really take in these excessive, docu, right? We looked at docu last time and even with the docu, is it, so I think literally the time we were here it was selling off here. And I said, I've been around a while to know that can turn on you pretty quick. It was building a little bit of a base. Could have never guessed this, but now look where you are, look, I mean, that's basically.
Man, I had a losing trade on docu. I bought puts in that in 150s. Right.
Right.
Oh, well, I guess that divergence wasn't real.
Mm-hmm. Well, no, and I think it's worth a shot. I mean, I've tried a couple times on different things. There's no question. It is so unique. I mean, one of the things I've tried to post even on Twitter is just that, when you take a look at taking the federal funds rate to zero and you look at the valuations and the way basically we're rewarding anyone growing revenue, and then you couple the work from home. But one thing I'll say is this too, and I put this on Twitter, just on a pure trading and sort of what's going on, this work from home ETF launched recently. And to me, these are all the signals, right? No one's going to necessarily give you an exact technical trade always. There's so much emotion, there's so much liquidity, and there's just so much uncertainty that to me, these are kind of your signposts. The work from home ETF, just the existence of it, I think is an issue, for newer money chasing this space. The question is, if you're aggressively short, then you get the day like this, and this is outside Bollinger, right?
Oh yeah.
Yeah.
Yeah, that was a crazy move today. I know some people who did very well on that, and I know a lot of people, myself included, totally missed it.
Well, I think you guys are doing a great job of actually, trading. Like I just think over time, like even stuff like this, I tend to shy away from. Whereas you're like, look, the chart, especially with the balloon breakouts and those things,
Mm-hmm.
But yeah, for me, it's hard to make a big thing around this in terms of the upside. And I just, in the back of my head, as I've seen now, if something were to change where you start to see shop and those really fade intraday or start to take out some levels here where it's like, okay, they've left some people, then I think we can have that bigger thing about, this sort of situation, right? And at some point, when you look at how far these have run, I don't think a correction in them will be as tame as they normally would be. I think you'd be talking. Mm-hmm.
So I'm just curious, what's your favorite chart going into the next month or two?
Oh, it's funny. Well, what's that?
Am I putting you on the spot?
No, it's fine. It's good because it's so funny. I was telling somebody today, I was like, I got like 50 stocks probably on the watch list, but when it comes down to like, you guys were saying, like you do the watch list, like what are you looking at? And like, your mind goes blank.
Yep.
Like, I think FXI to an extent is kind of in some sort of a base. I know that's probably kind of messy. I'll show you just
China ETF, right?
Yeah, let me pull it this way. And I know it doesn't look like much, but it just, to me, this is kind of how KWeb got going.
Okay.
I'll show you KWeb as well. This is obviously, it ran out of this base, right? And now it's been consolidating ever since. And these are gappy and kind of messy. I do have a starter position in YOLO, so maybe people like that one just because that's, I think on some level there's a bit of a base here. I don't think the numbers were great out of, whether it was CGC, right, or Cron, I guess, which is still in the dumps, and Tilray, of course. Yeah, I think XLE and those are still kind of to be determined. You can make a case they've been holding that level right in here, maybe squeeze them to the upside, maybe.
Have you looked at XLF? That's one that I actually have a position in right now. That's the financials.
Yep.
I'm just curious what your opinion on that is.
I think there's no question that they got too bearish in here. And I think part of this has just been about, breaking down the time frames a little bit. And if you see, so I had one of the largest algo signals I've ever seen on anything, and particularly XLF at the low. It was like literally 28 times the last reading. And that actually even goes back to 2010. It doesn't include 08, but even then 08 went to, just from what I'm seeing. So I think that rally out was relatively important. You could see sort of a fail here. And then you see a lot of people getting bearish on those time frames. Even if you take it down one notch, let's say go to 2 hour, you can really sort of start to see this trend. And I think in here is where, the traps were kind of set. And so for now, it's kind of an XLE situation in that way, is how much of this is going to really turn into one of those false sort of breakdowns. I do have a little FAS, nothing that is major.
Is this a leverage one? No, this doesn't.
Yeah. It's like I tell you the best thing I did, and I think this kind of goes back even to the marijuana thread, is just trend road TECL, because time is your friend after material moves, after a material low or even top. You've got to let the market kind of get to where it's going. And so I think on some level, when you think about why is XLF not moved, I mean, Buffett's been buying and all that, and I think there's some optimism there.
Patience, right?
Yeah.
Patience and risk management. So at least that's the way I look at it. Like, it's either going to go against me and I'll get out, or I'm right, and it'll touch that top Bollinger at some point.
Right.
Well, No, go ahead. Sorry.
Well, no, I was saying, I also think, like, I remember when I first, even the last show we did, and I thought, man, it's kind of a crazy time to go on. And in general, like, we're pretty much looking at this at the time, right? And so I think the key thing is there's no absolutes, when you're in this sort of situation. And that's kind of why I've said, well, I know that an XLK is still intact, and if you're nimble enough, then fine. But I think in the bigger picture, sticking to some things we know, we're outside certain Bollingers. We've had big rallies. Sentiment has shifted, at least in some spaces. I would argue not in all. And that's part of what this time is about. If you're younger, I remember in the 2011, in the debt downgrade, I bought a company, ALLT. I don't know if it's still even around. I think it fell off. It was one of those, momentum names back then. But anyways, what they were working on didn't really turn into a theme. But the point is, back then, I think I bought really close to the low, and I sold it like 2 weeks later. And then 6 months later, it had gone from, 8 or 10 to like 24. And I think I got out at 12. And so I don't think there's an exact answer just yet. I think the pendulum has swung so far that, all else equal, XLF over like a shop, at least now, how long that lasts, or even an AMD. Even one thing I've been looking at, which is, Intel has just gone nowhere. Obviously, they have execution problems. And then I compare that to like an AMD or a TSM, and I think, well, maybe I could park in some sort of pairs trade there and just kind of see if they converge a bit. But it's kind of tricky. It's more about, I think, doing less and letting the market give you, and the irony of it all is, imagine if Zoom kind of breaks here after, numerous false sort of things.
I mean, honestly, Zoom looks like it's starting to, right? But it could also be just taking out stops, right? Like, like charts have a way of doing that, right? Like, they know where your stop is and they hit it, and then they go. So, well, cool, Arun. Thank you for that. I enjoyed that. I'm definitely going to start playing with those multi-time frame Bollinger Bands a little bit more. I did not realize that everything is poking above them, right? And to me, that's a little ominous. But I'm also a little bit of a perma bear. So
I didn't know that. I did not know that.
I'm always hedging because I just don't trust this market nowadays, right? Like, it's going up, so I'm long, but if it's gonna go down, right? Like, I want to be prepared for it. It makes me, in some ways, just reconsider every trade a little bit more. So maybe it's healthy, maybe not.
No, I think it's the prudent thing to do, and that's part of why, like, even on Twitter and those things, it's hard. You can't convey everything. Like I enjoy the game of the psychological side of it and how people tend to get really excessively bullish here or not here, or they try to short every bounce. And I think the idea of prudence is huge, as and I think you guys do it well though too, because all the charts you're showing even during the weeks is like those are still setups. If you have that mindset, I only noticed this because it was kind of because you guys have the software, so that's one thing that I've always said is one of my favorite features. And then B is you get a sense where you're like, I wonder where that is in relation to Bollinger,
Absolutely. So I wanna just, I'm gonna get yelled at if I go any longer here, but
no,
I
no
want
worries.
to ask you a question that I think a lot of people are asking. Maybe you can just take a moment and tell the audience about Fusion Point.
Sure.
what you do, because you've got a great trading style and you're the real deal, and I think some people here would benefit from getting to know that a little bit more.
Well, first of all, that is very kind, and I very much appreciate that. And definitely, yeah. I mean, this is like, I came to Twitter later or whatever, and the main thing for me was just about showing kind of what I've been doing. What it is ultimately, what I run is just I combine fundamentals and technicals essentially, and I think there's a couple components. Fusion Point itself started on it's sort of organic, but I think the portfolio management thing is there, which I haven't done enough of. I run about 13 different scans, and I'll just show you. I mean, this is basically our software, but it's just 13 different scans that run across a bunch of different strategies, and they're all fundamentally driven. I then use technicals to kind of find them, and hopefully things kind of load up. But this approach essentially is multifaceted. It starts at a fundamental level. We kind of run everything through here. We get sort of the charts from there. It's a lot of these stocks, some of the strategies are more esoteric. And then I add in technicals and a quantitative bend. And so that bend is the algo, right? And that's the one that gives me sort of, we hope to add it into here. But yeah, it's comprehensive. I use fundamentals loosely, particularly to figure out what types of stocks I want to own. The technicals are generally the entry. And then the algo is a behavioral component that adds positioning, and sentiment, which I think is all. And at any given time, I would say all three of those factors matter. And at any given time, one or maybe two are dominant. And so, for instance, valuation has been completely irrelevant, right, for the last few months, whereas sentiment has been dominant in technicals. And I think obviously that will change. But so, by running enough of these, we tend to figure out kind of where, or not figure out, but have a better sense of kind of what I want to do. And that would tie back to like even the CGC thing at the end of the day. That probably screened on some of our most, expensive stuff. Then you get the algo, and then you get the technical sort of setup. And the interesting thing there is those were actually bull setups that failed. So it can come in different ways. But once you see it all come together, and just the last point I would say with Fusion Point in general, what I found is it really is about people who want to be comprehensive and learn those things. I think it's fine to have, to trade and all that, and people make big money doing all kinds of different ways. But I kind of tend towards the educational side. I'm not an academic, but I've studied quite a bit of this stuff. So
I love that.
Yeah.
So anybody who's watching wants to check Arun out, in the description below, we'll put a link to his Twitter, a link to his website, and we'll put a link to that marijuana stock thread in case you guys want to troll that. That's a fascinating thread. Arun, thank you for being here. I appreciate it. Will you be on again one day?
Absolutely, man. Thanks for having me, Dan. I love what you guys are doing. And like I said, I've told people this is one of the few new softwares I've incorporated. That other stuff we built on our own and everything else has been the past. And so this is one of the few new ones, and it's really structurally like this, but the way you add features to, I actually need to do more homework for myself to figure out what else I could be using.
Honestly, I can't even keep up with it myself. So thank you again for being here. And, thank you everybody for watching, and we're going to go right back to Jake here.
Thank you, Arun and Dan, for that segment. Let's move on to the weekend chart requests. And we have some different ones to look at this weekend. Thank you everybody for voting on what you wanted to see. We have 10 different charts to go over, starting with Apple here. Apple has just really been trading in an incredible channel here. And you can see that the price action is finally starting to kind of maybe lose a little bit of momentum here. Notice what I've done here is I've drawn a support line wick to wick. I've drawn a resistance line, pretty much just a line of best fit around all of these peaks here. And then what I've done is I have drawn another line in the middle here, kind of like a regression line. And what's really interesting is notice that the anchored VWAP from this July 24th low is literally right in line with this kind of middle trend line here. So the question is, will we break through to the upside through this resistance, or are we moving back down to the alpha trends anchored VWAP and this middle trend line here? We'll have to see what happens, but based on what we just looked at in the broad markets, it is going to be very interesting in the coming weeks, especially with August and September not being great seasonal months for the stock market. Now, if we look at the long-term chart here, going back from 2018, you can see that we did actually just break out of this resistance zone. And so we've got some differing opinions, I guess, as far as the charts go from a daily versus weekly. Daily's still telling us we are still kind of at resistance. Now the weekly is showing we are possibly about to continue up after breaking out of this long-term trend. So all in all, just mostly trend lines for this one with the alpha trends anchored VWAP. Sometimes that's all you need on your chart to really get an idea of what's going on. Moving on to Netflix. Netflix is still in this alpha trends anchored VWAP pinch here. As you can see, we do have the price action respecting both of these areas multiple times over the last few weeks, and things are just getting very tight within this range, and at some point something has to give. Now on the weekly chart, we can see that the 1.618 extension from this original measured move in 2019 is acting as perfect support once again this week. And, going on from here, we'll just have to see if this level continues to hold or if we're moving up to the 2.618 above. And, no one knows what's going to happen. We just have the charts to tell us what things are looking like at the current present time. Going into TDOC, this was a great case study on using raindrop charts. So shout out to Pup of Wall Street for finding the double blue raindrop over the last week. And what's really interesting is literally the next day, TDOC moved up like over 6%. And we did pull back on Friday, but you can see we had quite the confluence here. We had the volume shelf, we had the anchored VWAP from this March 17th capitulation point, and then we literally just textbook double blue raindrop on this anchored VWAP and this confluence area, and just an absolute rip to the upside the next day. And that was good for quite a bit of money on the option side. Now, if we go to the weekly chart, we can see here if we do have that anchored VWAP from this March capitulation area, you can see how well the price has been respecting this area as well as today. This is pretty much the same anchored VWAP here, except we anchored it from this weekly candle instead. And we'll just have to see if this holds or if this is going to go back down and test this previous area of support once again in the lower 160s. So TDOC, thank you again, Pup of Wall Street. And I know somebody else mentioned the confluence of the double raindrops with the volume shelf. I do not remember who that was, but a big shout out to them as well. If I do remember it, I will give you guys a shout out on our Twitter. I just need to go back and look at that, who that exactly was. So moving on, SLV. SLV is a case study for a couple of reasons this week. So one, SLV was a really cool case study on looking at the raindrop versus the hollow candle. So what we had here was we had a bullish hollow candle here. You can see by showing essentially that it's hollow. The open was around 26.50s. The close was around 27. However, the raindrop was not necessarily telling us the same story. And so what we had here was we essentially had raindrop divergence with the hollow candle. You can see here that the raindrop almost closed as a blue raindrop. Pretty much making it red was the fact that the second half of the day's VWAP was a little lower than the first, which is totally completely different from seeing that the open was, the close was much higher than the open on that candle, What happens the next day? Silver takes an absolute dive below, I think, over 13% that particular day. And so we'll have to see what happens here. But, it is interesting to see this case study from earlier in the week, blah, blah, blah. And we can see what happens when we do have these discrepancies, right? We had another candle here. We had this green candle, except we had a red candle here. What happens? We have the green raindrop, and we gap up the next day before having that. So using the discrepancies between raindrops and hollow candles is incredibly important. And just overall, the best way to use raindrops is using them side by side and looking for those discrepancies, whether that's the color or the actual wick. So looking at the wick and seeing, is there actually volume in that wick? So we'll have to see what happens. The last thing I wanted to talk about here was the 2011 high anchored VWAP. Notice that this was our area of interest for sellers initially in July. We broke through, and then we literally pulled back right to this area again before catching a bid and moving up at the end of the week. But definitely something to keep in mind that we did break through that 2011 anchored VWAP high. So going into the next chart, we have Walmart. And you talk about retail making a move. Walmart, Target, which we're about to go over, all making huge moves into the week ahead. So what we want to do here is we want to anchor the volume by price from this blue raindrop right here. If you see, we do have this volume shelf that was forming. Remember, as we always say, when the price was down in the 120s in late July, this volume shelf was initially a resistance or supply zone. Notice how many times that the candle kind of got stuck here, 4 different times. Finally, supply dried up. You can see that we actually do have quite a bit of volume at the top of the range here from Friday, showing kind of like a little bit of a peekaboo candle here. And if we do draw a ray from this point to this point, you can see the same type of thing. You can see some of that volume above the resistance zone as well as the volume shelf. Now, if we look at the monthly, the weekly candle, you can see here that I drew this similar linear regression that I did on Apple. You can see that the price is starting to kind of flag here and move up. So if this did continue to move up, resistance is around 140s, upper 130s. We'll just have to see if we get that far. But it does look possible at this point. Going into Target, another retail play. Target was an absolute beautiful case study. So if you were watching the Trading Pit for some time, I mean, we were talking about this inverse head and shoulders here on the weekly. We were talking about the massive volume shelf that was forming here. And what happens? Well, absolute rip off the volume shelf. So notice here that we had the volume shelf, we had the inverse head and shoulders, and now we absolutely are just breaking out over the last several weeks, not just this week. I mean, it's been 1, 2, 3, 4, 5 weeks in a row. This thing has just continued to move right up. So really cool case study of the volume shelf becoming a launch pad and absolutely ripping, especially with this inverse head and shoulders here on the weekly. Going into Lululemon, another one that we talked about with the volume shelf on the weekly. As you can see here, the case study that I want to go over on the daily chart is all of this volume above resistance about, let's say, 8 to 10 days ago. We could definitely tell that buyers were in control above this resistance line. We have the classic retest of this resistance before moving up. And since then, we've pretty much gone straight up from around 330 up to around 350. So nice move on Lulu shown by the raindrops. But also, if we anchor the volume by price from this capitulation point, this was an example that we went over a couple weeks ago. We were talking about this launch pad and what happened. Absolute rip off the launch pad. And we have had a ton of green weekly closes. This is 1, 2, 3, 4, 5, 6, 7th green weekly close in a row. Seems to be getting a little overheated to me, but who knows? Let's just go ahead and throw on the monthly Bollinger Bands and see. Yep, we're right at that area where the price is definitely getting a little overheated as well. So will it pull back from here? Who knows? We do have some of that volume supporting price at this particular area. So will this volume shelf become an area of support or a level of interest for buyers below? We'll just have to see what happens. But all in all, pretty impressive moves over the last couple weeks. D-Dog is next. D-Dog is one that I really don't follow that much, but it is one that a lot of people do follow, so that's why we are looking at it. And On the daily chart, we have this broadening formation here, pretty much stuck at this point, if you will. If we anchor the VWAP from this area, notice that we did have some trouble breaking through here. Now, this is a good example of using the raindrop and seeing that even though there was some volume supporting price above this anchor VWAP, we still had to move down. Notice on Friday's raindrop, there was no volume supporting price above this anchored VWAP, hence why sellers were definitely in control. And in order for buyers to come in, the price needed to drop, shown by this big bulge of volume at the bottom of Friday's raindrop. Now, the best part about this chart, and what really got me excited, was using the anchored volume by price and looking at this capitulation candle in March, as pretty much every candle we're anchoring from is that March capitulation point. But you can see here how well, when the price did move down over the last 2 weeks, notice where we caught a bid, right at this volume shelf below, i.e. a demand zone. And then look at what happened. The price was able to bounce right off this area, move right back up. And actually, we have this nice volume gap here that was filled. And then we almost hit this, this supply zone perfectly above. And now the price may be just ping-ponging back and forth between this zone for multiple weeks. We'll have to see what happens going into the second half of August. Fastly is next on the list. This one has had a little trouble kind of after breaking these highs over the last couple weeks. You can see here I'm using the Alpha Trends anchored VWAP technique, where essentially I'm anchoring the VWAP from this pivot on May 4th. And then what I'm doing is I'm anchoring another VWAP shown by this blue circle here from the touch of this anchored VWAP. And you can see how well the price has respected this. And now the price is kind of hanging out right between the two. As I mentioned, this is something that Brian Shannon teaches. This is not something that I made up, just a student of Brian with these anchored VWAP techniques. Now, going on to the weekly chart, we can see something pretty interesting, right? We've got this capitulation candle, as we keep talking about, from March. We anchored the volume by price from this area. Notice what's really interesting, though. Once we finally break out of this horizontal resistance, we anchor a VWAP, which is something Brian teaches from this breakout. And you can see how well the price respected this anchored VWAP this particular week. And then we do have the volume shelf as well. So will the price finally catch a bid? We'll have to see. But all in all, definitely pretty fascinating to see how the volume shelf is playing out here on the weekly chart. Now, going into the last one, Caterpillar. This is quite the broadening formation here on the weekly chart. So you can see here, we do have the anchored, no, we don't have anything anchored on this one. We just have the ascending wedge. I think I was trying to say ascending triangle, not ascending wedge. But this is really interesting. I mean, look at how perfect this moves up through previous resistance. We pull back almost perfectly. That almost looks manipulated, how perfectly that moved back. But notice something interesting. We pull back right to this previous area of resistance, which is now acting as possible support. And notice as well, if we take away this resistance line, you'll see even though we closed with a red raindrop, notice a lot of that volume is near the top of the range. And it's pretty interesting to see that, you know, this may be a reversal candle. We'll just have to see. But perfect respect of this previous area. Remember, if you do want to use double trend lines, I'm gonna use the first trend line at these wicks. I'm then gonna move the next trend line down to this wick, and you'll see how perfectly that really was respected over the last week. Now, if we go to the weekly chart, you'll see this just absolute massive broadening formation here. This resistance zone has been resistance literally multiple times. I have all these different circles highlighted, but I could even add more here. There's another one. Here's another one right here. So definitely a ton of selling pressure at this resistance line. And we'll just have to see if the price can finally break through this broadening formation. So that is it for the chart requests, everyone. I hope everyone has a great trading week ahead, and we'll see you in a week.